Good morning and welcome to the trade setup. I'm Neeraj Shah, and it's a day wherein we might have the SGX indicates we might have a flattish start. But let's take stock of the world markets, and they are doing okay, led by the US markets, of course, and led by Nasdaq in particular. Third day on a trot that the Nasdaq will have green on the screen. Let's get the global news flow first up on the screen, and you will see the reason why. One, of course. Okay, so let's go from the start. Xi Jinping, in a rhetoric which is combating the US's vowed victory in the tech battle after the US chip curbs. Oil has advanced from two-week lows on lingering supply concerns. The key from a equity markets and Nasdaq perspective is that Netflix has returned to growth, saying the worst of slowdown is over. As a result of which, big tech and streaming stocks stage a late rally after this beat. Nasdaq futures, as we speak, are trading in the green again, and therefore that should be something that should be kept in mind. So the US markets, if you see the performance, it was a day in the green, and Nasdaq was up about percent yet again, down in the S&P almost an encore. The other the key indicators did not deviate too much, so the markets have done well despite the fact that there has been no change or no material change in the dollar index or the CBOE VIX or the US 10-year yield. The yield is at 4%. Dollar index is 112. So there's hardly any change there, but there is a bit of an uptick that is coming into the markets. Sign of some bit of risk on in what is arguably a strong quarter. Remember, at the start of October, we had brought you this chart which showed how world markets usually have a good quarter in October to December. Only 3 times in the last 20 years that the world markets have had a negative last quarter. So is this a start of yet again something like that? Let's see. The SGX Nifty indicates a flattish start today. It's it's almost meandering at the same level. So 17,519. Okay, a, a slight bit of an uptick to 24 odd points, 0.14%. Hardly any uptick really. So just about there. But these levels are important. I'll tell you why. So let's get the trade setup up. The highest call over is at 17,500, and the 50-day moving average is at the level of 17,493. So if we start above this and stay above this, then we are and materially above this, that is, then we above the highest call open interest and above the 50-day moving average level of 17,493, both of which technically would mean that we have room to go higher if we eclipse this and stay above this level convincingly. So which is why it becomes a bit of an important level. um, no, I think what we're missing is the fact that tech, the line is missing here. But let me tell you, right, that amongst other things, tech stocks will probably see continued interest after Netflix numbers and the Nasdaq up move. City gas distribution companies continue to drag and remain on the avoid list for smart money. I spoke about this yesterday and day before yesterday as well. And people continue to tell me that that's one pocket that they would not want to participate in, despite the fact, I mean, some people tell me this, despite the fact that the markets are staging a bit of a recovery. Just a trivia. I mean, YTD, Nifty's turned into the positive, but Nifty Bank is up about 12% or 13%. The point is, Nifty PSU Bank, YTD, is 25.4% versus 13%. So imagine the gradients of what the Nifty's done, which has remained largely flat or marginally positive. Um, Compare that to what the Nifty Bank has done, which is a 13% up move, and compare that to what the Nifty PSU Bank has done, which is even better. Just goes to show how well the performance has been. So that's the long and short of the trade setup today, viewers. And just that Nifty versus Nifty Bank versus Nifty PSU Bank. Just the gradient is very, very wide thus far. Would it mean that there could be a bit of a mean reversion? Don't quite know. But for now, people seem to be preferring banks and PSU banks out there. Earnings today include Ultratech, Nestle, IndusInd Bank amongst the large ones. Then there is HDFC Asset Management and IIFL Wealth. There is Havells. There's Naveen Fluorine and Syngene. Okay, what's happening? Virat, let's stick with the earnings today. Thank you. IIFL Wealth and HDFC Asset Management. There is Syngene, there is Persistent Systems and Inox Leisure, amongst others. And Persistent is something that people will keenly watch out for, simply because it's made a habit of surprising on the upside. Remember, while not all IT companies disappointed. Infosys did well, Mindtree did well, Persistent could do well. So do watch out for that one as well. And Naveen Fluorine, I think brokerages have said that they expect very strong performance from Naveen Fluorine in the quarter. So do watch out for that as well. Havells will probably not have a great performance. I think the management had said in the last quarter that Q2 will not be a great quarter on the margin front. Q3 onwards, the good times start. So let's not expect fireworks from Havells today. There is also a listing today, Piramal Pharma. And I don't know much about it. It's a very difficult business, frankly, viewers, to analyze because, as I think Sajal has said as well, Sajal Kapoor, who runs a Twitter handle called Unseen Value and pretty strong pharma name, and mentioned in one of his tweets that it's got some 6, 7 businesses within it and very difficult to analyze. And therefore, I'll bring out the Motilal Oswal view. They expect the fair value to be about 210 rupees per share. They say it's a differentiated business model which has a CDMO business, complex hospital generics, and India consumer products in the business. They expect resource hiring to revive the CDMO business. They expect easing of COVID-related restrictions to drive the consumer and healthcare growth business, consumer products business, and they expect EBITDA CAGR of about 26% over FY22 to 24. So let's see what price it lists at. Very difficult to figure out. I mean, at least I don't have a handle on it. But Motilal Oswal expects a fair value of 210 rupees per share. What about stocks to watch today, aside of Piramal Pharma, of course, which will list? Watch out for LTTS. Revenues up 6%. The Bloomberg estimate was 1966 crores. So the revenue is better than estimated, and 6% growth is decent, by the way. And it's better than what the Bloomberg estimates were. EBITDA margin is flat at 21%, but point is it's better than the Bloomberg estimate. And the net profit is up 3% at 282. The Bloomberg estimates was 273, so largely in line. But the point is, viewers, compare it to what peer sets have done, or rather, one company out of the peer set has done. LTTS is showing reasonably good traction in the quarter. You never know, might get rewarded in a scenario wherein tech is anyways doing well. ICICI Lombard General Insurance performance up next. Revenues up 18% at 4499. The estimates were 4522, largely in line. EBITDA margins at 11.34 versus 12%. Net profit at 591 versus the estimates of 337. One-offs out there, but net not a bad number. Let's wait and watch how this one reacts. Speaking of tech, by the way, Sonata Software revenues fell 16% at 1496, but the expectations were a mere 1249. EBIT up 10% at 140. The expectations were 131. Net profit up 6% at 112. The estimates were 104. So numbers are better than estimated. Let's wait and watch if Sonata Software has a reaction. Schaeffler India, decent performance. Revenues up 18%. EBITDA up 20%. EBITDA margin flat. Net profit up 26%. You couldn't find too many faults with this one, right? Then some numbers which maybe left a bit to be desired. Network 18, TV 18, for all the fanfare around the properties that they have, the numbers didn't look that great. Net loss for Network 18 of 28.84 crores. There was profits of 39 crores. TV 18, EBITDA margin just at 3% versus 7%. PAT down 83%. Not a great number. Mahindra CI Automotive, revenues up 30%, PAT up a mere 3%. So again, not a great number and left a bit to be desired, really. What else? Let's show some volume buzzers. So yesterday amongst the gainers, viewers, BHEL and Data Patterns had some very strong price volume action there. Look at that. And among stocks which didn't do well, I was caught wrong on Maharashtra Seamless. I thought that the bonus and the results would mean that Maharashtra Seamless could have a good day. It had a terrible day. And on good volumes, by the way. PSP Projects, another one. By the way, the con on PSP was strong, but the numbers, or rather, the performance yesterday was not the greatest. Volumes up 7x and the stock fell 10%. Tata Elxsi, volumes up 4x, the stock fell 7.5%. So, this is the point I was making about LTTS. The Tata Elxsi somehow has had an iffy quarter and it's showing in the way the stock is reacting. LTT has actually done reasonably well compared to others, compared to Tata Elxsi. Let's see what this one does. A couple of other stocks before I get to what stood out for me. So Prestige Estates has had strong pre-sales data. 16% quarter-on-quarter growth, 66% YOY growth, pre-sales that is. Collections about 21% higher QOQ, 68% YOY. And the company is on track to achieve its guidance of about 12,000 crores pre-sales. So that is interesting. Alembic Pharma didn't have any major observation from US FDA on the oncology injectable facility. And Midhani, there is news reports about how Boeing India is going to collaborate with Midhani to develop aerospace parts and defense components. So that's interesting. Let's see if there is some traction here. Sorry, have I missed out on Praj Industries? I have. I missed out on Praj Industries. So a couple of things, viewers here. Praj numbers came out post-market hours. The order inflow lesser than Q1, but this is seasonally a weak quarter. So compared to Q2 FY22, 745 crores, the order inflow was 981. But I think in Praj's case, the margins were a bit of a disappointment. EBITDA margin at 7.4 or 7.3%, not the strongest. And maybe the stock, because of that reason, has a bit of a negative reaction, maybe. But I think they are entering a seasonally strong quarter, and it'll be interesting to hear from the management what they have to say today. So we'll, of course, bring you all that conversation details as well in a moment. But remember, Praj Industries talks to us today. We also talk to Syngene today. We speak to LTTS today. Yep, that's the lineup. Shishir Joshipura at 3 p.m. Sorry, not 2 p.m. And Amit Chadda of LTTS at 11:15 a.m. So both these conversations you might want to tune in. And the MF show Diwali special comes in at 4 p.m. today with Radhika Gupta and Kalpen Pare. So that is the interesting one. Okay, the people wanting views on Gujarat Gas and PSP projects. Well, I mentioned for PSP, the con call was strong. The management has maintained the guidance of 2,200 crore of revenue, a YOY increase of 25-26%. The order book is the highest ever. Order inflow is very strong. So the stock fell yesterday quite strongly, but the con call is strong. Let's see if there's a bit of a bounce back there. Gujarat Gas, like I said, in the trade setup, most people are talking about avoiding, or smart money is talking about avoiding the city gas distribution stock. So be mindful of that. Not everybody wants to pile into that space currently. I think there are some uncertainties there. So be mindful of that. Is the time right to get into cement? Well, I think the numbers are not looking that great. The outlook from the companies as we get them will be interesting. I think the call on cement might be better taken after the quarterly numbers are out and the commentary from all the companies are known. We will be talking to some of those as well. So we'll keep you updated on that. For now, difficult to say. The numbers are looking very, very patchy. What stood out for me though, before we wrap up, is the Bank of America Fund Manager Survey. And the key they talked to a bunch of fund managers, right? And it's global, of course, in nature. They're saying that the fund manager survey screams at macro capitulation, investor capitulation, and crucially start of policy capitulation. Cash levels are highest since April 2001, and investors are 3 standard deviation underweight equities, and therefore they believe there are tasty morsels for a bear rally if the US Treasury yields stay below 4%. They say that the big low and the big rally will happen in the first half of 2023 when the Fed cuts become consensus. Do you want to preempt that? Remains to be seen. India might be slightly different than the US markets in which way, so bear that in mind. Thanks so much for tuning in. A bunch of results slated to come out today. We'll keep you updated with them on all our social media profiles and, of course, conversations, as we already showed you today, tomorrow, and day after. A bunch of management conversations and bunch of Diwali conversations. So you might want to tune in for all of those. Thanks so much for tuning into the Trade Setup. Have a safe day ahead.